Welcome back to TV5 News at 9. It's now time for Aging in Style with Volatility Wealth Management. And joining us this morning is our great friend, President and owner Joe Vitale. Joe, it's so good to see you.
Good to see you. Good morning, Sarah. How are you?
Good morning. Good. How are you?
Good, good.
Good. All right, so don't forget to go Joe's newsletter. It's called Financial Vitals. It has everything in latest market trends and financial news. You can scan that QR code right there on your screen to get everything and all access to all that information and access on today's topic too. So Joe, last week got a little spooky-ooky for some of us.
It did.
Yeah. So all three major U.S. stock indexes posted their largest three-day percentage declines since June 2022. Just break it down for us. What happened?
Well, you see a lot of the unemployment numbers. They didn't like that. So everybody's looking for the softness coming in because rates were so high for so long. They're still high. They haven't come down yet. So that's what the Fed wants to see. They want to see the unemployment go up a little bit, basically to soften it because the spending is just too much. So that's what they were kind of priced that in, and now they saw it. They're like, oh my gosh, we're going to start to go down. So all of a sudden the sell-off happened. A lot of it is profit taking though too, because you got to remember we're up 15. It was up 15% for the year already. Then last year was a good year, so you got a lot of profit taking. The S&P, just really the top 7 or the top 5 companies is really what's running the S&P 500. So they're like, you know what? Let's take some profits off the table. And then what happened right afterwards? It went up. It went up. It went up, and we're still seeing it go up. So we haven't still recovered from that, but you can't go up all the time. You have to have a little back and forth.
And you know, Joe, a big question I think on a lot of people's minds are, should we be concerned about or scared for a full-blown recession?
You know, we've been talking about that for 3-4 years, right? They're like, oh, we're going into a recession this year. We're going into a recession. And every year it's the same thing. When is it? When is it? Who knows? Nobody's got the crystal ball, right? But I don't see it happening. I mean, really, because we still have strong job numbers, even though we got a little pullback. So we still have strong earnings. We still have strong consumer spending, which unfortunately is not that good because it's still on credit cards, where it used to be a lot of cash, but people are going in debt like crazy right now. You're starting to see a little bit of softening. I don't know if it's going to be full-blown for the next year, but maybe about a year or two after. I think we're going to see it. I don't know how bad it's going to be, but we have to have the ups and downs. That's the basic economic cycle. Is you got 8 to 10 years of prosperity, then you have a lull. You have to do that. You have the ebbs and flows. But as long as you're prepared, you're going to be okay. We can get through this. We're always going to get through it.
All right, especially when we have you, Joe, giving us advice.
That's right.
Yeah. So you talk a lot about diversification. Tell us why that is so important.
Well, you've got, you know, they talk about diversifying the stock market, large cap, mid cap, you know, international. You have to have diversification, especially you can't just have like one stock or one holding. You have to be all diversified. But you also have to make sure that you've got cash on hand, make sure that you're not overly, you know, you're not too stretched. You don't have just one thing. So you got to diversify properly in stocks and in other asset classes.
And Joe, you know, why is the proper allocation so important, and how does allocation differ from person to person?
It all depends how they feel. I had one of my clients, I said, how comfortable, if the market goes down, how comfortable are you losing a little bit of money until it comes back? She goes, I'd better never lose a penny. I said, well, you shouldn't go in the market then. You know, not everybody can go in the stock market. So some people have to go and maybe you get CDs, or maybe you got fixed annuities or fixed indexed annuities, something that they're still making 5.5%, 6% guaranteed with no risk. There are some really good strategies out there right now. So to diversify some of it in safety, bonds used to always be the safe haven where people would go into bonds, you know, but bonds are still down from where they were 2 years ago because interest rates are high. When you're higher for longer, the values go down. So there's better strategies to diversify in. You want to make sure that you're allocated properly. It doesn't always have to be in stocks, but to have a good portion in stocks is important because when the market goes up, you want a piece of that.
And Joe, speaking of strategies, what are some good strategies for income for people who are retired, and what is the best way to kind of create a plan for that?
You know, a lot of times people want that mailbox money, right? Their pension or their Social Security, they don't have that pension. And it's like, I need that check coming in. Well, if you can create a check automatically coming in, whether if it's a fixed income annuity, something that's guaranteed, and if you pass away, it goes to your beneficiaries, that's important. I love to do strategies like that where you've got that. Or you can peel off stock earnings by dividend yield, or you've got yield coming in from the portfolio, and that's coming in reoccurring. great ways to have predictable income without having to worry. And that's how you're able to, all of our clients are able to get through when the market's up or down, not worry about it.
Yeah.
Because that income is predictable and it's coming in every month.
And Joe, tell us, why do some people maybe tend to go back and forth or flip-flop and make sudden changes? Is it kind of, well, I feel like I know the answer to this. Is it hard to stay the course?
It's hard to stay the course if you're emotional. Right?
Yes.
And who's not emotional, right?
Right.
I mean, we all look at the market. It's like, oh my gosh, I'm losing everything.
Yes.
This is what they told us was coming at the end of the world. And they, oh my gosh, they lose it and they pull out. Don't do that. That's why call us. We take the emotions out of it, you know, and that's the biggest thing. I'm no different, right? When I'm looking at oh my gosh, I got to pull back. We've got our team of professional money managers that do all that. They manage $6 billion for us and other advisors, and they do a great job. So we let them do it all, you know. But I help quarterback it, make sure you're in the right positions, so that you don't have to worry about it. If the market goes down, that's okay. Your income's protected. You've got predictable income. You can wait till it comes back. So we help with that.
That's some good stuff, Joe. I love that. So exciting things are happening with you. You have a big event coming up. Tell us a little bit about that.
Yes. So next Thursday on the 22nd, we have our Shred event and our open house.
Cute.
We redid our office in Metamora, so we have an office in Metamora.
Nice.
And we're going to have a Shred event from like 10 to, I think it's what, 11 to 2, 11 to 3, 11 to 2, 11 to 3, yeah. So we're going to have an open house. We'll have lunch. Come see our new office, how we redid it, and bring all your Shred stuff, and we'll take care of it.
Yeah, and is this the first open house since the big rebrand that you guys done?
It is. Since the rebrand, we had the rebrand, and because our office in Metamora, we had it for about 6-7 years, and we needed more conference room, and plus with the rebranding and the new company name, so we redid it all, and it looks really good. So come and see us.
I love it. Joe, anything else you want to add?
That's it. Just give us a call, come and see us, and we'll be glad to help. And keep your head, because with the elections and everything else happening, we just gotta make sure to keep our heads and stay the course and be properly allocated. Yep.
And you can take care of us when we get too scared or worried when it comes to our money.
Take all the emotions out of it.
There we go. Right. I love it, Joe. All right, so before we go, don't forget to get market updates and more through Joe's newsletter, Financial Vitals. And if you want more information on today's topic, head on over to the Aging and Style page on WNEM.com. We'll be right back.